What's up, guys? This is Carter Thomas back with Coin Mastery TV. Make sure you hit the subscribe button if you're new, and if you're returning, hit that thumbs up button. Let's get this party started. Been away for a few days. Took a kind of impromptu trip down to Colombia, Bogota specifically, with some really good friends of mine. One, to go to a music festival, and two, kind of unexpectedly learned a lot about the culture down there, about the political history, about money, about greed, and things like that. It was just really fascinating. And I'm not really big on politics. I certainly don't talk about it. I'm not going to start talking about it. However, seeing how money and politics and how it's all really, and violence, how it's all very much connected, it was a huge learning for me as it relates to blockchain. And so I'll talk about that later on in the video if you're interested. I think you should. It's very timely, and I think it's also very important to learn about this stuff. But through that trip, I didn't even take a computer with me. I was just like totally doing that stuff, and there was quite a bit of what do you call it, wildness going on in this crypto stuff. So today we're going to talk a little bit about what's going on, kind of my take on this, especially from not looking at it for a few days, along with some news headlines, what it means, and just giving you an opinion, especially one from somebody who just disconnected for 4 or 5 days. I think it might be helpful because if nothing else, I learned that when you step away from this whole crypto thing, especially and you're occupied with something else a lot, you really get a new perspective or an additional perspective on this. Okay, so that's where we're coming from. Obviously, I'm still a little jet lagged, so thanks for bearing with me. And we're going to kick it off by just looking at Bitcoin charts. Now, I have not been looking at these charts. I do not know all the tiny inner workings of what happened, so I'm just looking at this with some fresh eyes right here with you. As always, this is not professional advice. This is just a random dude giving his opinion. So what we're looking at on Bitfinex is Bitcoin looking at this trend line. And so there's a few big deals here. The first, obviously, this bottom trend line. We know that this all in February, this hit the 6,000 level. We hit 7,300 level, give or take. Was it about a week ago? And then now, as of today, actually, we're touching it again. Now, the third time, the fact that we're touching this the third time is honestly, it's a little kind of concerning. And it means that there's a lot more pressure than people maybe gave it credit for. Typically, if you're going to hit this trend line 3 or 4 times, like 3 times, you're going to start to build up a lot of pressure because the demand side pressure is becoming harder and harder to sustain. That's really what this line represents. And so by no means is it definitive. It just means that from my perspective, I'm looking at this saying that this is almost a bull trap, meaning it kind of was a big fake out to get people excited about crypto and get them back in so that people that wanted to sell whatever amounts of crypto they had more liquidity to sell it in. That's really what bull traps do, especially on a margin standpoint. And you can manipulate price through that. So we'll see how this daily candle plays out. This is going to be a very important day to see where this lands, because if this is a reversal sign, so be it. If it leads into a reversal next, so be it. But I do think this also brings up an interesting point where one of the big pushbacks on technical analysis is that if everybody's looking at the same technicals, then it kind of becomes a self-fulfilling prophecy. And I think in crypto, it's actually kind of true, which enters in the whole side, psychology and game theory of it all. And this is what's interesting about moments like this, at least in my experience with markets, is that this is when people stop. The technical reinforcement is not strong enough to overpower just the fundamentals of like emotional drainage and patience and working yourself through it. And we'll talk about a book in a little bit that I think will hopefully illustrate this. So bottom line from my perspective is that if this bounce right here that we're experiencing right now, if this holds more, and it wasn't just a ton of people watching this technical line, if this truly is support, if this is not just another bull trap, we will be in the clear. But we really need to hold that, to be perfectly honest. This daily candle needs to be a reversal. Otherwise, ... So that's what we're doing right now. I'm going to keep an eye on this pretty closely and go from there. So not the greatest news, but it is objective. And that's all you can really do is have a plan, right? So if we wake up tomorrow or tonight or wherever you are and we're up at 8,400, what do you do? If we're down at 7,400, what do you do? If we're down to 6,000, what do you do? And if you don't know, that's the problem. It has nothing to do with price. It's just what's your plan. Now, the other big news, in my opinion, is what's going on with the stock market. So I'm pulling up right now the S&P 500, which is an index of Standard & Poor's 500 biggest companies. And we're starting to see a bit of weakness in this chart. Now, I personally think that the stock market still theoretically has a lot of legs left, mostly because of corporate earnings. But the fact that Facebook is getting just crushed, not that they're even one of the, they don't dictate the market by any means, but I do think that signals a lot of potential domino effects. And one thing I was listening to on the way home, which was really interesting, is this idea of a longer term trend line. So right now you can imagine visualizing there's a trend line that touches these bottoms, just like in Bitcoin. And right now we are bouncing off of that trend line again. Now, if we stay above that trend line, we're good to go. However, if we break that trend line, what happens, especially in things like the S&P 500 or the Russell Index or NASDAQ or whatever, there's so many ETFs and there's so much robo trading, which means that there's programmatic trading that goes off of rule sets, that if we break that trend line, which is also probably pretty close to the, I would say, 200-month moving average, it triggers a lot of rule sets within these funds. And so one of the big fears of automated trading, of passive income investing, index funds, is that there's a multiplier effect, right? There's a huge volatility potential because the safety nets go down. We saw this very kind of loosely with people shorting the VIX back here, right? When you had that 80% day, when everything just cascaded and triggered. So this is really important. Now, the reason why this matters is because no one is really sure yet how crypto, specifically Bitcoin, impacts the S&P 500. Does Bitcoin tell the future of what happens with the S&P 500, or is it a reverse? Is it more like a gold? Do they mirror each other? What's the relationship? And nobody really knows. But this is something that you want to pay attention to, especially from the micro standpoint. Individual, this is real money, right? I don't care how much you believe in cryptocurrency. At the end of the day, you still need fiat to pay for certain things in life. You need to pay for bills, card payments, and that's not going to change anytime soon. And if the stock market starts going down, that has huge ripple effects onto people's portfolios, on their psychology, and on just their overall wealth. And so that can also affect how they sell certain things, what their fear level is, what their ability to take risks looks like. It becomes very different. So that's why I think that this stuff is really important in the grand scheme of things as it relates to crypto, especially if we want crypto to become an investment vehicle. Now, gold is actually looking better than it's ever looked, or at least in the past couple of months or even years. I think gold's got a very good looking chart right now. There's a lot of momentum behind gold. It's getting a fair amount of press, as is silver. Silver is more of a banking speculative play, which that's probably more of a finance discussion. And so we're seeing this as a clear inverse, but we're seeing the SPX and Bitcoin. We're not quite sure what it is yet. Although I will say that if fear comes through the S&P 500, that is going to be very hard for people to hold on to their crypto because they need money. People will retreat to cash overall. That's like how market psychology works. And the last thing I'll say as an idea to keep in mind is, remember that famous like Wall Street, whatever you call it, the bubble chart thing we looked at last week. And so imagine if we didn't have this second, last few months. I'm going to take off log here for a second just so you can see we had the bubble. Then we had the second peak, and now we're bouncing, and now we're kind of watching this bear trend play out. If you look at the S&P 500, theoretically, if this was a bubble, you had the same parabolic move, bounce. We're seeing the second peak. We're seeing another bounce, right? Just like we saw here. And then the bottom fell out. So if this is in fact a bubble, and I'm not sure it is, this could have a lot of runway left in it. That would be the thing to watch, especially as it relates to ETFs and robo trading and all that sort of thing. But these are, it's just looking at these objectively, that's really all you can do. That's all you really want to be doing if you are looking at this as a trader, as an investor, whatever it may be. Now, one thing I noticed about altcoins is it seems to me, as someone who took a few days off when we had the beginnings of what everyone on Twitter was like, hey, alt season's back in action. It was very short-lived. And so anybody who signed up through like Binance using my affiliate link, my referral link, I get some tiny percentage of the trading fees if anyone buys. If you trade something on Binance, I get 20% of 1% of the fee. Like, it's tiny. And it's all anonymous, but I do get to see what is being traded, because you'll get paid out based on what the currency was that was traded, a very small amount. And what was interesting is when I logged in today, Tether is by far the most traded coin, followed by, I believe it was Icon and BNB were the other two, all of which had massive runs in the last few days. But what that says to me, especially as this Bitcoin dominance is continuing to creep up, is that a lot of this, I'm using air quotes for anybody listening, a lot of this alt run that has happened and people are it almost seems like people are trying to force it right now, is just money that's already in the system. And maybe it's on the sidelines and people are just looking to buy something and they're dumping it into the thing that's pumping now to try to just get something. Because we talked about this last week. I think that there's this overwhelming feeling of, man, I just need to get out from underwater and then I'll be smart about how I invest, right? Like, I got to get back to break even. I'll rebalance my portfolio. I'll be smart about it this time. And that's a very dangerous place to be, because that's when the market really crushes you, because you're not being proactive. You're waiting for the market to take care of you in a lot of ways. And that's what I'm seeing with altcoins. Now, I could be completely wrong. I hope I'm completely wrong. I hope this is the beginning of something huge. But just from the data I have and from the observations I have, I think that a lot of these altcoins is the current ecosystem of retail investors that are just taking money that they already have, that's fiat or Tether or whatever, and they're waiting to redeploy it. It's not new money coming in. And if you want a detailed description of what I mean by this, go on the YouTube channel. There's a playlist on the youtube.com/coinmaster called Greatest Hits. And there's a video about like what's the next alt season. And I talk about my personal theory about how we get altcoin season 3 and how it really requires new retail investors, new money to come in. Otherwise, there's just going to be pumps from existing people who go in, they pump it, they try to get the profit, and they pull it back out. And that's why you see these things pump and then they go down very, very quickly. It's not like a sustained long-term pump. Now, we'll see what happens. These obviously take a couple days, couple weeks to really materialize. A lot of it's going to be based on what happens with Bitcoin, but that's just my perspective. So tread lightly in the altcoin space. That's all. I guess that's what I would say if I was going to say anything. At least that's what I'm doing. I'm being very cautious about what I do with that. Now, in other news, I would say one of the more bullish things that I saw is Coinbase is going to add ERC20 token support over the coming months. That's a lot of Ethereum tokens. That is what many of the altcoins are built on. Not all of them by any means, but many. And they are going to hopefully add new assets to the platform. But there's a few really important caveats here that if you didn't see it, hopefully I can mention this. This first note where it talks about Coinbase custody says, note, custody will likely support more assets than those available to trade on GDAX or Coinbase for the foreseeable future. Okay, so let's zoom out for a second. Coinbase wants to become the go-to thing for crypto. If you look at their business plan, they want to get crypto in the hands of as many people as possible. However, the third big piece of their business model is Toshi. If you don't have Toshi, it's an app on the store. It's basically WeChat that's built on the Ethereum platform, where it's like apps that you can use stuff. But it's all dependent on Ethereum succeeding and ERC20 tokens really driving that thing. But before they get Toshi really blown out, they need massive liquidity and they need massive people to own these ERC20 tokens so that there's enough velocity in the marketplace. So they're kind of setting that up. However, what they're going to do, in my opinion, before they start letting people trade it, which would just facilitate the existing altcoin stuff, is they're going to bake ERC20 tokens into that index fund so they can diversify, which makes the product much sexier to sell. It can also justify the management fee of 2%. That's going to bring in more people into the ecosystem, thus fulfilling the prophecy of growing the crypto space way before they're going to start putting ERC20 tokens on your Coinbase account, in your GDAX account, anything like that, the way they would like a traditional stock brokerage account. I think they will at some point this year, but I do think that their main goal is going to get those index funds more attractive to retail investors. And the way they do that is by having more things that can prove diversification within the fund, more rebalancing. That is a much better pitch. So a lot of people are getting very excited. ZRX obviously pumped because of this, because people think, or the assumption is that ZRX is the protocol that would facilitate this sort of ERC20 token integration. The other piece being that many people on the ZRX team used to work at Coinbase. So there's a lot of, political narrative there potentially, but who knows? So I think that this is a very good deal. I don't think that this is going to mean that you're going to see ERC20 tokens on Coinbase anytime soon. I do think you'll see them in index funds, which will obviously cause a pump, but I think that they will be able to, I think that they'll lump a lot in at once. So there's no one coin, pardon me, that pumps at once. So good news, obviously very, very progressive. And if you're ever interested in what Coinbase is trying to do, Google Brian Armstrong's original slide deck, his pitch, the whole business model of Coinbase. And you realize their whole mission is built on this idea of creating a WeChat built on Ethereum that not only tokenizes the world, but it gets digital currency into the hands of everybody in the world, basically. Now, the other news that I saw, unfortunately, Litecoin, LitePay, it turns out that is not going to happen. So if you're a Litecoin holder, if you're like trading Litecoin, whatever it may be, I think that this is just unfortunate news. Does it kill Litecoin? Absolutely not. Litecoin's got very active community, foundation. They've got a lot of really good interest. It still holds the foundational principle of it, but it does mean that some of the progress, and especially some of the emotional progress that Litecoin's been having about being the immediate processor of currency payments, has lost some steam. Whether or not that affects price, I'm not sure. I think that Bitcoin's price is going to be a much bigger deal than this, but it does really illuminate the idea of like how pricing is really being done, how coins are being valued, especially we'll see this as Lightning Network gets rolled out. But I think like Litecoin's value prop has always been the testing bed of Bitcoin. I think the LightPay, in my opinion, was just this amazing experiment that if it worked, it would have just catapulted Litecoin. And it didn't work, and it's a setback, but it's by no means a deal killer. Obviously, I own some Litecoin, but that's an objective opinion. I think I would say that about any coin that has a massive amount of people who believe and are working on it. So a lot of people have been asking me about that. That's what I think about it. Okay, one last thing. This article, if Facebook can be worth billions, why can't cryptos? And I'll link this up. You can make your own conclusions about this. But I think that this is a little, it's funny to read this, because while I do think that crypto networks, crypto assets, networks, whatever you want to call it, can all be valued in the hundreds of billions and trillions over the coming decades, I think that there's a huge, it's very, very difficult to try to value things that make no money versus things that make a lot of money, or the things that have few employees versus things that have thousands of tens of thousands of employees in real estate and server farms and like everything. I'm not here, by the way, I'm not here to defend Facebook by any means, but it is a very important conclusion that when you talk about valuation, we live in a world that values things in a certain way, and most of that over the long term is done through the ability to generate revenue. I think crypto assets will change that to a certain extent, but I don't think it's going to be like, oh, this company makes money and this company has interesting tech and they're worth the same, unless the interesting tech has the ability to generate more money, because money in capitalism is typically the measure of value. That's obviously a grand overstatement, but you get what I'm saying. So while I do agree with this long term, I think it's really, really important to think like a banker. Think like an investor. Think like a trader. Think like a venture capitalist. Think like the people that control the money and that make the money of this world. Because while we do want to change the system, you can't fight the system as easily as you can as improving or innovating or kind of decoupling the system first. And if you start walking in and being like, dude, Verge could be worth $900 billion. I mean, why couldn't this be worth more than Netflix? People are just going to, that's not the conversation you want to be having. It doesn't help. No matter how many numbers you throw out. And this comes from talking to tons and tons of people that are interested in this technology, but I mean, it's just, how could you even compare these two? Like, come on, right? That's just my opinion, though. I would love to be proven wrong on that. So it goes. Now, quickly, if you're listening on the podcast, this is a book. I put this book in my Amazon bookstore. You go to coinmastery.com/store, and that'll take you. You can check out some books that I find interesting. This is a book by Seth Godin called The Dip. It's like 100 pages, and it talks about how he uses the analogy for entrepreneurs, but I would say this is true for a lot of things: investing, trading, entrepreneurship, making money. And the book is called The Dip. And if you're listening, it's really, you can see like the first part of this curve is kind of going up, then there's a big dip, and then it goes parabolic up and to the right. And the y-axis, which is the vertical axis, is the results, and to the right is effort. At the beginning, which is often called beginner's luck, as he references in the book, everything is pretty easy and you get really, really good results. We talked about this last week, 2 weeks ago, when we talked about how during a bull run, you put in a little bit of effort and you get really good results. And that was kind of a widespread bull run. Then you get what's called the dip, when the beginner's luck runs off and you have to put in more effort. And the dip is when virtually everybody gets weighted out. This is definitely true with entrepreneurship. This is definitely true with trading. This is definitely true, even true with investing in crypto. And the kind of narrative for many people is, well, the dip is coming. If you just hold through the dip, eventually you'll make your way through. There's the other narrative is you double down on certain things in the dip, and that's how you capitalize on the upside. But the point is that this dip, this is real stuff. This messes with people's heads. This drives people crazy. This makes people negative. If you watched the live stream last week, or if you listened to it, you could tell there was so much negative energy on that live stream. And it was just like, it's frustrating, but that's where we are. Like, look at this chart. This is what everyone is feeling. This like shows a sign. And if people are used to making tons of money and they've never invested or made money before, never had that kind of money, and then they lose it all, it's extremely difficult psychologically. So what I would encourage anybody to think about, and this has happened to me in many ventures, and I didn't make it through all the dips, to be perfectly honest. Some of them I did, and it was really successful, but there's been many projects when the dip was it was too much. And this is what's happening right now. This is what markets do, okay? It creates these psychological lows so that it weeds out the people who are going to capitalize big on the upside. And you need to make your own decision on how you capitalize on this dip. Maybe it's just holding, and in 5 years, your crypto is worth whatever it's worth. For other people, it's being proactive. That's what I'm starting to do, is being more of a trader and just thinking that way. But this is real stuff. It's happening. It's going to push you. And if you think that it's pushing you to your psychological edge, you need to realize that it's going to push you way farther than you think that you can go. And then it's going to reward people. That's why it's like they say there's such small percentages of people that win, is because they underestimate how powerful and how strong and how far this dip will push you psychologically. So you can read the book, very helpful. And I'm not going to really sit around motivating people, because you kind of have to just experience it. And I think we're all getting a taste of it right now. And speculation aside, I have no idea what's going to happen with Bitcoin's price. But a dip would be like a $3,000 to $1,000 Bitcoin. That's the kind of psychological pain that these tend to press on people. And then you find out who's really hanging loose. I wouldn't say that that's good news, bad news. I'm just saying that that's been my experience. And the more aware you are of it, the more you feel like you are in control, the more control you actually do have over what's going on. And that's 3/4 of the battle. Now, last, I wanted to just show you guys a few things. So I was down in Colombia. Obviously, saw some great music, LCD Sound System. If you've never seen them, go check them out live. Gorillas were awesome. A lot of really good bands. But I also went on this graffiti tour of Bogota. Bogota, obviously, is a huge city in Colombia, the capital of Colombia, and it has a lot of history with political corruption, with violence around drugs, with money, with extreme poverty, and by no means are they out of the woods yet. But it was really good to see a lot of how graffiti art was a illustration, no pun intended, of what's going on, what has gone on, and what the feelings that are still within the culture. And it was an incredible experience. And if you're listening to the podcast, you can check out a few photos. This first one is just really about, this is a lot of revolutionary kind of feelings. Probably most notably here on the right, you see this guy who is supposed to look like someone who's done well. You can see he's got a pig nose, but he's also got this dollar symbol, these golden handcuffs that are kind of holding him down. And the picture, you can't really see a whole lot, like all the details, But it was very, very interesting to see how much money is tied to things like oppression and all that. Similarly, there was a museum where they talked about how so much of the political system has been rigged and been, people get paid to vote for certain things, or politicians get killed for doing certain things. And lastly, maybe on more of a positive note, there was artwork for people that expressed how much hope there was still left. And this was painted as a way to show kind of light pushing back against the oppressing values and the darkness and all that. Now, the reason I'm telling you this is not for any sort of political statement, but for the realization that I had, which is that all of this is just based on money and who controls money, and how money, people at the top, what they will do to stay on top. And I would encourage you to read up on the history, whether it be Colombia or Venezuela or really any country in the world that's had major corruption problems. There is a huge, what I realized at least, it's you underestimate what people are willing to do in order to stay in power. It's easy to think, we're just going to take down the banks, or we're just going to take down the government, or, blockchain's just going to really take over the world. But the level of defense that people will defend that power with should never be underestimated. And it should also never be forgotten, because how important it is to keep up the idea of not allowing that sort of thing to happen, and not being privy, or not being ignorant of that. Ignorant is not the right word, but being aware of it, I should say. And I think that that's one thing the blockchain can do, because at the bottom line, beyond all the speculation, behind all the money, behind all the wealth that's being created, there is the potential for a much better and more just world. And I think that it's just so important to remember that. But the other thing that I think is important is that one reason why I never really tell people, hey man, don't worry about the money. Like it's not going to make you happy. You should really find your passion. I don't really do that. And the reason why is because I actually do think that people should make a lot of money, especially if you want to make a lot of money. And the reason why is because if you feel a desire for money, if you feel greedy in any way, that's not a bad thing. It's just, it'll never be quenched until you have it. Until you have that money in your bank account or on your ledger or your treasure, until you have it, till you can actually see it, you will always dream about it. And you will always assume that it will solve the holes inside of you that you feel like you have, right? Like they say, greed is the emotion of not having enough. Right? It's the personification of that feeling. And it's true. I mean, money just makes you more of who you already are. It'll obviously solve problems like you got debt or car payments, like they'll solve that stuff. But what happens is that people tend to, they make the money out of greed, and greed can be an amazing force of growth. I mean, look at crypto. Like, look how much greed can create so many things, but it becomes uncontrolled. And what happens is that greed keeps going, and when greed stops fulfilling the prophecy of this is awesome, it turns into the next thing, which is the desire for power. And then you get the desire for power, and you realize that politics is how power is wielded in countries. Right? Alexander Hamilton once famously said, the only two reasons for a country to exist are for a military and for debt. And political systems are to maintain that. And so greed turns into power and into politics. And the reason I think that this is important, if nothing else, just for my own life, is if you don't have like a system, if you don't have plans, if you don't have something in place that stops the greed, or it measures or holds the greed accountable, it won't stop at greed. It will turn into something more. It will turn into the exact system that crypto is trying to take down: banking, government, oppression, whatever you want to call it. And that is what happens over and over in the cycle of humanity, is that process. And I think education's a huge piece of that. I think that technology can be a huge piece of that. I think that transparency, but this was such a cautionary tale, and how things play out, they will play out. And again, I think I believe in abundance. I believe that there's more than enough money for people to make, and I want everybody to make a lot of money. But greed, unchecked, is a very, very dangerous path that sneaks up on people very quickly. So I'll leave it at that. It was really enlightening. I was really fortunate to be able to go do that, and especially with people I really care about. We'll go from there. So, good to be back, guys. I'll be back tomorrow. We'll chat then. Peace out.